Hi, folks. It is now officially 2022. I know we're kind of deep into it, but where do you put your money this year with inflation?
Inflation. What do you do?
Yeah, I mean, the past couple of years, it's all been about growth with interest rates low.
What do you do about inflation?
Low inflation.
Coming right up, right?
Yeah, inflation is high. Where do you put your money now? We're going to let you know right after this. Yes, we do this professionally, don't we?
Semi. Yeah.
So all the experts are saying, get your money out of growth and put your money into something that actually is making a profit. Interesting, huh? You're going to invest in companies in the stock market that are making a profit.
It's a novel idea. It's one that they should have figured out a while ago, I suppose.
But most of the experts are telling you to put money in real estate, right? But most of them are talking about REITs. We don't deal with REITs. We deal with people that are actually in the trenches.
In the trenches,
and
the people
are
who
direct in real estate.
Yeah, who have had a lot of experience, who share our values. They always do the right thing. Like that's who we want to work with. We don't know who's pulling all the strings and things on the REITs. When we make a call to the people we work with, we know exactly who's doing what and when.
And I'm getting a little ahead of myself. By the way, thank you folks for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management. We're lenders in the Southeast for real estate investors. If you are interested in borrowing any money, go to carolinahardmoney.com and click on the Apply Now tab. Sorry if I cough a little, I'm getting over a cold. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, and hit the bell. Also, don't forget to sign up with Wednesdays with Wendy. She gives up. As I'm talking through the intro for Wednesdays with Wendy. Anyway, she gives up 30 minutes of her time per person each Wednesday just to talk about real estate. So sign up. There's her Calendly link. She's typically a couple of months booked in advance. So I think we're done with all of our housekeeping.
Right? No, now to the interesting part is, where do you put your money? How do you hedge against inflation? All of those things. And then where do you put it that is with a good operator, someone or someones who, have been doing this a while, who know what they're doing. And that's what I'm really excited about. We have our good friend, Mr. Randy Lawrence, getting ready to come in with us. And when it comes to expertise and when it comes to integrity, he is top of the list.
He knows people that are.
He is top of the list for sure. Let's bring Randy in.
Thanks for joining us, Randy.
You have to watch that Bill Fairman. I could hear that from backstage here. So there you go. Good to be here with you guys.
Excellent.
So I know you're working on a project in the Atlanta area called Parkside Crossing.
Yep.
And I wanted to get a little bit more detailed in how you go about looking at projects and repositioning them to do a value add, specifically for investors, but how you're improving neighborhoods and then at the same time improving the property values and again, adding value, but at the same time, adding value for the people that are going to be living there as well.
Yeah, for sure. No, absolutely. Thank you so much. It's funny. A lot of times right now, especially in the, commercial space or more specifically multifamily, people are like, well, I don't know that there's any deals to be had or, it's so competitive. The key is, though, having the right relationships and being the right operators, So like for us, as an example, we are in the majority of markets we operate in. We are the top, 1, 2, or 3 speed dial guy. Like in that Atlanta market, we have been probably one of the most active buyers, probably buying 16 properties in the last, 24, 30 months, something like that. And so the folks that we work with know that Prosperity Capital is going to execute on what we say. And so that's got a lot of value. And so like this particular property, Parkside Crossing, that we closed on, last quarter of 2021, it was where it was owned by a father and son ownership group. They'd owned it for a bunch of years. Really, their business model was just kind of, milk the cash flow, don't really fix much up. And everybody's got a different model. And so they had a number that like, hey, if we could sell for this number and have certainty of close within this particular time frame, we would do that deal. And so that was brought to us exclusively to say, hey, these guys want to sell. We've done a ton of deals with you. If you can hit this number, they're sellers. And so we were able to jump in, underwrite it. We knew the people that were already managing it. They'd worked with us on other assets. And we had our other team drive the property. And then our acquisitions folks worked through everything. I was able to comb through, all of the data, and then also talk with the existing folks that were managing it, who I know, and really be able to determine, man, this is going to be a great opportunity. It's a great value. And so, that opportunity came to us, and most people out there never even saw it. And so that's first and foremost what I would say is, having the expertise, having the reputation, and not some BS, Facebook fake reputation, but the real deal where guys know when they're bringing a 20, 30, $40 million asset that it's like, hey, these are the guys. And so that's where, people say, oh, I don't know, I haven't seen deals. It's like, well, I would also probably say you're probably not necessarily in that same positioning to see those deals.
That's such a great point, Randy. I mean, I don't know if everyone can see that and appreciate that. Like if they would have taken that property to market, they could have gotten probably, a couple million more for it.
Yeah.
Because, you would have had a lot of buyers coming in. The ability, and there are a lot of mom and pop sellers who just want certainty of close.
Yeah.
And when you create that reputation of doing what you say you're going to do and certainty of close, you get great deals that no one ever sees, and you get to come in at a lower price point than anyone else ever would. And that is amazing.
Yeah. And we just got another one here in Tampa, like 100-unit deal that, we paid, it's probably a fair market value for the price. It was off market. And again, same story brought to us. Hey, if you can hit this number, these guys are a seller. And the key, though, is what you just said is true. If that property would go out to the market, it probably go up by another $5,000 a door, or, $500,000 to $750,000. So, and by having that reputation, that would enable that property to come to us. So now, and again, we paid them fair market value, but I mean, good Lord, we're going to be able to take the rents from like $1,000 to $1,450. I mean, because they just haven't been, operating the property. They haven't renovated, and the market's changed all around them. And so again, that's a phenomenal thing. So again, it's not like we, every time now Parkside, we bought it at $85,000 a door. I mean, good Lord, by the time we close the market, it's probably 105, and it's even beyond that now. But that's so critical. And we've spent probably hundreds of thousands of dollars kind of eating crap sandwiches on deals that have given us that reputation that we're one of the smooth operators. There's no headaches, because again, sometimes sellers are wonky and people do weird stuff, and, they stiff you for like, what's 40 grand, and people's egos get in the way. And we, I just say, I talk with our guy we're working with, like, look, okay, it's 40 grand. It's not right. Hey, look, I'll eat it on this deal. But like, we got to make sure that we don't encounter this next time. and those things add up to create that opportunity. So it's, not easy to get in that position, but praise the Lord, it's a good position to be in.
I can tell you that there is no type of artisanal bread that will make those sandwiches taste any better.
No, it's, and the funny thing is, most people, it's the ego that gets in the way. It's where, oh man, you can't, and their ego drives their decision making. Whereas realistically, we're very pragmatic. And so it's like, hey, if I'm buying a deal for $18 million, 40 grand is nothing. Like it really is. I mean, like it doesn't move the needle one bit in terms of the total return to the project or to the investors or to me. I know 40 grand is a lot of money. I understand that, but in the bigger picture, it is not. And so that's where, that's part of the equation.
Yeah. 40 grand on when you put a cap rate on that, it's nothing. What is it like $1 a door, if that, it's like, it's nothing.
It's not, and so, but so we look for these properties, and most of the properties we get, not all, but most of them are coming in some form of off market fashion. And then we're looking for that ingredient, like with Parkside Crossing, where, here it is, it's been operated. The market is changing around it, meaning improving, getting better. There's more demand for quality. And the units have not been updated in line with what people are looking for. And, look, we focus on affordable workforce housing, meaning, just regular working Americans that are making, call it $35,000 to $65,000 a year as a salary or income. Those people would like a nice place to live. They're no different than you or me, mm-hmm. and our model of business is to find those undervalued properties like that, where, again, even the one in Tampa, we're paying market price for it, but it's undervalued because it's not been updated and the rents are $1,000. Same thing at Parkside Crossing. It's undervalued and the rents are $800. Good Lord, all around the rents are $1,100. You know what I mean? But they are nicer properties, and people are willing to pay more money for a better quality of life. I mean, think about it, like you or me, like, do you want to live in a crappy place, or you like going home and you have a little bit of sanctity when you go home at night? Because, hey, work can be challenging. All of us got challenges, could be stressful. And that's the same thing for the guy that's working at the FedEx distribution thing. You got to get out the packages and it's stressful. And, and when he goes home, he'd rather pay $1,050 than $850 and be in a nice place that's relaxing and, well run and close to his work. So he doesn't have to fight traffic for 45 minutes. It's just kind of seeking to find out where people are at and providing value to meet them, and that's what we've been able to do very successfully. And Parkside Crossing is a great example of it. If you were to look at the map, like this property, it's in, southern Atlanta, right by the airport, only 10 minutes away from the airport. And if you know anything about Atlanta, it's like it is a traffic stall nightmare for the most part. People are accustomed to driving 45 minutes to an hour just to get to work. And again, I go back to the guy that's working at the FedEx distribution making $43,000 a year. Is he really want to drive 45 minutes after a shift of, 9-10 hours? He'd rather drive 10 minutes. And that makes a competitive advantage, because like this property is located right by the airport where all these distribution and light manufacturing hubs are. And it's not a lot of competition there because there's a lot of industrial stuff out there. And so that's a great opportunity to transition and begin renovating this units to now make it a nice oasis for the guy to, hey, 10-minute drive from work, and I've got a beautiful 2-bedroom apartment, and, I got room for my kids to play, and it makes life better. And so that's what we focus on doing.
Yeah. I mean, it's what you do. I mean, you're providing a win-win situation for everyone. You are providing a win for the tenants who get a nicer place to live, a safer place. Yep. And then the investors who can come in and be a part of changing people's lives. Oh, yeah. They get to change lives while also making money along the way. So I
Yeah.
mean, it's a beautiful thing that you're doing, and I'm very appreciative for all the neighborhoods that you're changing.
100%. Thank you so much. And that really, our core value and our mission is twofold. It's to transform the lives of the folks that live in our communities. And we do that first and foremost by making it just an overall holistically better place to live, better quality, better, residents, and better quality of life. And then secondly, just like you said, the investors that come in with us and invest with us, they're able to get a double-digit return. We've had folks been with us 18 years with no loss of capital, even during, 2 recessions, the Great Recession in '08, and then here the worldwide pandemic. And, so that's critical. And then, like you talked about in the beginning too, it's like, real estate, hard assets have historically been the best place to outstrip inflation, and when we, I look back and studied, 1978 to 82, average inflation was right about, 9.8% in this country over that length of period of time. And then your average commercial real estate investor was just under 10% return. That's aggregate all commercial real estate, and multifamily apartments did even better than that. And so that's across that span of 78 to roughly 83, when we went through such a surge of inflation back there in the 70s. And even now, inflation at 6% last year, everybody's up in the air, maybe it tapers down a little bit this year. But again, we're going to see that inflation. And this is a place where, good Lord, you see rent growth in the markets we're in. Atlanta's up 18%, Tampa's up 20%. And that's a result of both the inflation component and the demand component of all these people and businesses moving to these areas to get to, business friendly tax climates, low tax places, better community orientation to live in, maybe less of this pandemic, kind of oversight craziness that has happened in many places. And so, for the folks that, sitting on the sideline, it's like, yeah, you need to be able to move into something like this that's going to give you a quality investment return, provide security, make an impact that, you're doing good with your investing, and you're benefiting you and your family or your legacy financially by continuing to grow your money instead of inflation eating it away. There's folks I know, look, and again, you'll know some of them too, praise the Lord, that they, they're waiting for this deal, man. Like, oh, I want to get this kind of deal, right? I want to get this kind of deal. And it's like, dude, what the hell, man? You've been waiting for 2 years, right? And in 2 years, right? Like, and again, I God bless them. They're waiting. And the truth of the matter is they've been losing out both against inflation, but also the opportunity cost, right? Because let's say they could have made 12%. They've now made 24%. Inflation's been 6 and 3. That's now they've lost, good God, 35% almost of their money.
Yeah.
And now they don't look at it that way. They're still waiting. I got this thing I'm waiting for. It's like, well, praise the Lord. That's probably not the best approach, Yeah,
everyone. I mean, no, it's always the question that's asked, but more so now. It's like, is now a good time to get into real estate? Should I wait? And it's like, every day is a good day to get into real estate. Like,
sure.
Like, just like you said, your opportunity costs that you're losing out on just think about it. If we even if we average out to 3 years on a, I guess 3% on inflation, you put that over 5 to 6 years, your money's almost worthless at that point if you haven't invested it.
I think the thing that, like, buying real estate correctly, like what we've said, working with, somebody like yourself or us, where you're getting, hey man, we know this is a quality investment, buying something off of Zillow or MLS that's, 6 people competing to buy this house for $50,000 over list. Yeah, probably not a good investment unless you're just buying it to live in it as a home for the next decade. But, now is the time, right? Like, because again, those folks have been sitting for 2 years and are going to wait another year while they make a plan. It's like they've lost half their money. And,
Yeah,
and
we're to see what the market does, and while you're waiting to see what the market does,
well, and here's the thing. And again, my background's finance and economics. And of course, I was a money manager for 15 years. So I look at it very pragmatically, numerically. That person sits there and they go, well, yeah, I got 250,000 still sitting in my account. But the truth of the matter is you've lost 35% of that. You've lost virtually $100,000 in terms of the actual real value of your money when it comes to opportunity cost and the cost that you've lost by just sitting there. And they don't look at it that way, but they should, because it's like, look, now's the time to take action to do something quality, because then you're going to be moving forward instead of moving backward. And again, people look at it and they go, well, I still got my 250, but it's like, no, your 250 is not worth what it could and should be worth.
yeah,
So one of the things that we always talk about, pretty much anything in business and in life, is that done is better than perfect. So you need to take action. Besides that, let's get a little bit more specific about Parkside and a couple of things. I know you already touched on the Atlanta market, on how it's growing. I'd like you to, if you have any numbers at all about the migration into the Atlanta area or in the Southeast in general. And then I know your exit strategies, or your eventually when you reposition these properties, I know it used to be that you were your strategy was to refinance and hold, but that's kind of changed a little bit because people are throwing out crazy numbers at you, and now selling is kind of high on that list. You want to talk about that a little bit too?
Yeah, for sure. So it is that, Atlanta itself is projected to have a 3 million net inflow of new people, and bring their population up to about 9 million people. I mean, so it's just every day, you see continuation of companies like Facebook just expanded another 17 acres to their campus. Google, the same. It's like all these tech companies are establishing kind of beachheads, for the Southeast, if you will, as well as other companies. Atlanta Airport was the number one freight airport in the world until just this 6 months ago, and it's still right there. But so, you've got all this net inflow of migration of people, jobs, businesses, just continues to push the demand, no doubt. And that's why we look at markets that are like that. We're not necessarily invested in backwater Mississippi. Nothing against Mississippi, praise the Lord. I'm just, any area that's got negative net migration and negative job growth, that's probably not the first place we're looking, because, the wind's kind of against us, so to speak. Now, so we're always looking for that kind of thing, what you see in Atlanta. And then, as we take a look at the property itself, we always look at how can we, effectively and cost effectively renovate a unit. Typically a lot of times it's anywhere between $5,000 to $8,500 a unit, depending on the condition of the unit. And we're able to reface cabinets and put new flooring and new lighting and, all these things that make it look like a brand new 2000s nice apartment. And then the other piece of it, we look to see the where it's geographically located at. We want to be in a good location, right? Good location, again, real estate, 101, location, right? So you don't want to buy a place next to the hood, or, it's next to some freaking sewer plant. You know what I mean? Like, we want it to be in a good location. This property is. And then also, is there, decent running room for people, meaning, they've got a little bit of spread outness. And this is a very typical kind of rectangular property, meaning it's just a big rectangle, large 250 unit apartment complex, but there's green space in between the buildings. There's place to create additional amenities with barbecue and pergola, and improve the playground. All these things that are like, hey, what would a person like? Again, hey, you got off work. Most guys maybe want to have a beer and cook some chicken on the grill or whatever. Like, hey, we want to facilitate that ability. Or their kids come home after school. We want to have a playground for them to be able to, have a little fun, dog park where they can walk the dog, the kid can play. These are all things that, again, kind of thinking what would serve this person and make it a better quality of life. And so that's, part of what we do. And then this particular property had an added bonus of about 30 units that were down, meaning they, were hard turns. The other ownership, again, they're just cash flowing it. They didn't put a lot of money in it. Again, doesn't make a lot of sense. I understand, like, why would you want to just have 30 units down for years over years? But at the same time, everybody is not the same business model, right? Mm-hmm. And plus their cost basis had been low. So they're still making money by just, kind of squeezing the dollars out and not putting much in. So that for us gives us an added bonus where we can go in, we're finishing renovation up on those units. And it's like now you got 25 or 30 units, bam, that can immediately come out of the gate. That's 10% of the overall complex, where now we can take those and bring them out to market, 1,100, 1,150 rents, whatever the case may be on a 2 or 3 bedroom. And so that's an added bonus, you know what I mean? So we're always trying to uncover the hidden gold. There was a book written 3 Feet from Gold, right? And it's like, the truth is, oftentimes there is gold right around you, but people don't dig deep enough to find it. You know what I mean? It's like, hey, I'm going to go over here, or I'm going to go to this Amazon store thing, or, whoa, this dude I saw on Facebook making wiki tricky money. And, it's like, no, you got to dig deep. You got to cultivate it. And that's where the real gold comes from. And that's why we've been so successful, and the folks investing with us in these projects have yielded such great results.
I like when they get so focused on picking up nickels, they step over the dimes to get them.
Yeah. It's true. People do that. It's crazy. And you got to look at the bigger picture, right? And I think that even goes back to the people that are on the sidelines. What about this? What about this? It's like, there's a great quote that Solomon said. It's like, if you look at the weather, the wind and the rains, you won't invest. You know what I mean? And that's a parable, not exact quote, but that's roughly what he said. And it's like, that's the truth. You're always going to see there's something, and
there's always a reason to act now. We can always find a reason to not act now.
So,
people told me this in 19, we bought 7 or 8 communities. Oh my God, do you feel like you're overpaying? And, I don't know that, man, that's so much. 7 communities. Good Lord. It's like, every one of them is a freaking winner. And I knew it at the day we're buying it. We don't buy something on a maybe and a hope. And I'm like, oh my God, I don't know what's going to happen. And it's like, you know what? Sure enough. And again, think back to 19, that was a lot of people's mentality. And like every one of those properties over the last 2 years have just killed it.
People just always need food and shelter, Randy.
Yeah. I mean, so.
Before we let you go, let's touch again on how the market has changed, where, again, that exit strategy is more about sale rather than refinancing.
Sure. So we also look at, and again, very good point there, is we look at, what is our overall return on equity? And exactly that is that at this juncture, like where we would own a complex, say for 3 years, it really is more beneficial to turn around, optimize the return by selling the community, and then being able to take that full return, and then having that ability to reinvest in a new community where we can replicate the same results because of the pricing that we're paying. And also the overall arch of the return does yield its most result in that first, call it 3 years, because we're taking the community from what it is in 800 a door rents to, what we've now made it in 1,100 rents. And so that's really the draw of bringing that value up higher, forced appreciation. Once we've hit that point in today's market, if you refinance, then your internal rate of return or return on equity drops down pretty dramatically. And it's like, okay, if we're going to continue to do this work, meaning, capital working and the intense effort to focus on driving the project, why not maximize the return for everybody and replicate that investment with a new investment that's going to have that same window? Now, a lot of guys maybe don't feel like they could buy another property that has that same window. And so for them, it's like, but we operate more from an abundance mentality of like, hey, we're going to be able to find a deal that's a good deal. And we've consistently been able to do that. And so when we sell the property, those folks can turn around and opt to say, you know what, hey, yeah, I've got my money back, but now I want to go into the next one and I want to do it again.
And I would say that most operators that are going to purchase that type of property are not going to be REITs, because it's not A-class property.
Yeah.
So in my mind, the people that are interested in buying this, why would they buy a property that's already kind of peaked at their return? They're not going to get a value add from it. They're going to get lower returns. But I know what my answer is. Tell me why you think they would be interested in buying those at a lower cap rate.
Yeah. So, well, with these properties here, we definitely purposely purchase communities in the, call it 10 to 60, $70 million range. That's underneath what the Blackstones and the REITs are buying, just because, they've got to write, $150 million checks to move the needle for them. And we're competing against less healed people, if you will. They're not well as put together as our organization. And then once we go to sell the property, though, two things. Either one, there's folks that are looking for a quality stabilized property that's got still kind of core plus, meaning they can still drive rents by making small improvements. And then in some communities, like one that we're selling, Green Village coming up, it's got additional units still to be able to be renovated. And so again, it adds a component to it that gives the buyer an ability to continue to drive performance, but also make some renovations and some kind of meat on the bone. So, we also take that into account when we, execute the plan, right? So like even on this Tampa deal that we're doing and we just got under contract, that's part of the thing. It's a B-class property. We'll execute the renovation, do the thing that will still, leave a handful of units that are going to be needed to be updated. But at the same time, there's plenty of people, high net worth individuals that would be looking for a good return, a good place to put their money. And it's going to average out a higher yield because there's still a little bit of room to adjust by making those small improvements.
Yeah. So there is still some value add there. My idea was there's a return on effort. So when you get it where it's almost already stabilized,
oh, for sure,
there's not as much effort involved in getting that return.
100%, and that's spot on, bro. Because look, what we do. I mean, I got people that are like drunk on idiocy at times, and they're thinking, it's hard, right? Like, you got 250 units, you got 30 down units, you got some tenants that from the takeover that are not the most ideal that you have to work through and replace, so to speak. And, we've got our asset management team working with the property manager, the regional manager. You've got those tenants that sometimes aren't happy about the new sheriff in town and the new rules that we implement. You've got the construction vendors that are coming in to do the work. And like, there's a lot of pieces. I mean, like, I'm meeting with my team every week on these. They're meeting with it on a weekly and multi-day basis. It's not like you just buy it and whoa, hey man, we're making money. It's like there's real work going on between here and there to make that result happen. So no doubt there's plenty of guys, they don't have the teams, the systems, or maybe even the desire to do what we're doing. And that's exactly what you just said. They'll buy it where it's nice and stabilized. You fix up the kitchen with a little backsplash or something like that and bump the rent $20. And, that's their thing. Cause now it's running stable and good. And, that's a quality investment for them. That's not typically our model, but that's, a lot of guys' model.
Yeah.
Excellent. Thank you so much for your time, Randy. Appreciate you coming on.
Yeah. Glad to be here with you guys, and great seeing you. Great catching up.
And let's, Sharub, do you mind putting Randy's information up there if people want to invest in some of Randy's projects? Excellent.
Awesome. Very
Listen,
good to see you guys.
have
2022, great year ahead.
That's right.
Absolutely.
That's right.
Take care of yourself. We appreciate you coming on.
Thank you so much. Have a great day.
Thank you so much for joining us on the Real Estate Investment Show. That's hard money for real estate investors. We are Carolina Capital Management. We are hard money lenders in the Southeast for real estate investors. If you are interested in borrowing money, go to carolinahardmoney.com and click on the Apply Now tab. If you're a passive investor, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell.
Love that one.
And don't forget to sign up with Wednesdays with Wendy. We're changing our format. We're only doing one live show per week, but we're going to do lots of content on our YouTube channel. So we're still doing 2 shows, but one's going to be pre-recorded. Talk to you later.